Thank you. Hi, thank you so much for attending today. My name is Sokha Yous. I am the Financial Wellness Counselor here at Mayo Employees Federal Credit Union. And today we're going to be talking about managing credit wisely, especially in this day and age when inflation is high and student loans are starting back up and everything. Making sure we have, understanding our credit and managing it as wisely as possible is really important, and also to maintain good credit. Again, my name is Sokha Yous, and this is my phone number if you need to write it down, and it's my email address. And even after this presentation, if you need to speak with me to talk about your personal credit information, or if you want to talk about budgeting or anything that's personal finance in your life, you're more than welcome to reach out to me. And this is my contact information, which will be on our website as well. Okay, and for our agenda for today, we're going to talk about the importance of your credit scores, how credit score works, what is in your credit score, and tips to build a strong credit profile, fundamentals of borrowing, and also we're going to end with some fun credit facts and myths. And the importance of credit scores, the role they play in our financial lives. So credit scores help us with the ability to get a mortgage, a car loan, so any kind of personal loan, any kind of loans at all. It even helps us get apartments, your car insurance and stuff. All of that needs your credit score. And it gives you the best interest rates available, but also great premiums when you apply for car insurance as well too. So for example, with your car insurance, they of course look at your driving history as part of the main driving factor is how much your premium is going to be, and then they look at your credit score. So it helps determine if you get good premiums, or if your interest rate for your mortgage, your car loan, whatever loan it is you're going for, it'll give you the best possible interest rate. And also rents, of course, they check your credit and your rental history as well. And also some certain employers check your credit score as well, depending what role you're going into. So it's really, really important to have a good credit score, or at least just really understand what goes into your credit and what's in your credit report as well. There are statistical tools used to predict your future behavior. So the 3 credit reporting agencies are Equifax, Experian, and TransUnion. Each have their own scoring model, so it's really important that even though if you have Credit Karma, or if you have a credit card that shows you your credit score, it may not be the accurate credit score that we're looking for. So for example, if Credit Karma is telling you your credit score is at 750, but you go and apply for a mortgage with, with a financial institution, they tell you your credit score is actually 710 or 720, so it's a little bit lower. It's because whatever credit model that Credit Karma is using is completely different than what the financial institution is using to determine your credit score at the time. So even if you go to the same institution and you apply for a car loan and also a mortgage, it's going to look at different variations. For example, if your credit score is at 750, but you've had a repo 5-6 years ago, you may get a higher interest rate, when you get a car loan. So they kind of look at that as variations as well. So we're also, in order for you to access your credit report, you can actually just go to annualcreditreport.com. It's a free service online. You can access it usually once a year. And you can just put in your information. You can pull up your credit reports as well. So it's really important to know what's in your credit report. And they have, you can pull up your Equifax, Experian, TransUnion on annualcreditreport.com as well. But they don't have your score on there. You have to pay to get a score. But again, the scoring on there is not really important, because you might want to save that dent on your hit on your credit report when you actually need to apply for a loan and stuff. Okay, and what goes into my credit score? So 35% of your payment history is counted towards your total credit score. 30% are amounts owed. 10% is new credit, 15% is the length of credit history, and 10% is a credit mix. So what that means, what's really, really important is that you pay your bills on time. So you make sure that your credit cards are paid on time, anything that's going to be reported to the credit bureaus, any loans and stuff. So for example, like utilities is not being reported, but it's really important to still pay it on time. Your rent is not being reported on the credit score, onto your credit history, But if you fall behind your rents and you get evicted and stuff, that goes on your credit history. So it's still really important to make your payments on time too. So any car payments, loans, student loans, of course, pay your credit, pay all that on time. And then amounts owed, which means it's another term is the credit utilization. So out of $10,000 available credit, are you maxing it out every month? Are you keeping it on towards the maximum? Or are you just spending $1,000 or $2,000 on it? The ideal credit utilization is under 30 or 40% of that credit card. So for example, if you have 3 credit cards, one of them is maxed out at $10,000. That's 100% utilization. The other one is at 0%. And then you have another one that's maybe at 50%. You're still at a higher risk, and that still lowers your credit score because it shows that you're not really having the discipline to not spend all of that money. Even though one of your other card is, at 0% utilization, the others are on the higher side. So what that means is when where your credit utilization is higher, if you happen to get sick or something happens, an emergency happens, and you don't have enough in your emergency savings account, then you're probably not going to have enough money to pay back the credit card, and then it affects your payment history. So the last thing I want you to do is to max out or get even, ideally, not above 30% utilization. New credit. So new credit affects 10% of your credit score. For example, if you've opened a credit card when you were like 20, and you're now 40, and so it shows that your longest credit history, the longest open account in your credit history is 20 years. But you just got a new credit card today because Kohl's is running a great special. You get 30% off of your purchase if you open up a new, credit card, store card. That's how they get you every time. Macy's and Kohl's, especially around the holiday season. But now you got this brand new credit card. It's a new line of credit. So to kind of shorten the times of your credit history, okay? Because the longer your credit history, the better your credit score, because it shows that you're able to maintain a good payment history, a good history with your credit. So be very, very mindful when you open up new credit, and it does affect your credit score. So that goes to the length of credit history as well. So new credit and also length of credit history, and also a mix of credit mix takes up 10% of that credit score. Let's say we have student loans, a mortgage, a car loan, a personal loan, and a couple of credit cards. That's a pretty good mix. But if someone is, they have one credit card and one car loan, and that's all that's on their credit report, that's not that good of a mix. So then it doesn't give you the best possible credit score. We're not saying just to go out there to get loans and stuff just to make the mix better, but it shows the lender a variety of types of loans that you're able to handle, so that you're able to pay back different types of loans, revolving loans and installment loans as well. So, and tips to build strong credit profiles. So the credit profile is specifically to you. And for example, if someone is asking me, listen, if I don't pay my car note this month, how many points is it going to drop on my credit score? The answer is always, I don't know, because it's specifically to your situation. If you ask me that, and the next person asks me that, it's going to be completely different. It depends what's on your credit profile, your age, the age of the credit history, the current balance that you owe, and things like that. So it's really, really important that it's going to be very difficult for us or anyone to calculate how much the scores are going to go up and down. There are AI tools out there that you can use, and but it's always best to try to pay off as much as possible. Know how your credit score is calculated. That's really important as well, which we just went over. Also, always make thoughtful and deliberate choices. I know it's really tempting with all the sales and stuff out there, with the cars, the vehicles out there, even though interest rates on vehicles are a little bit on the higher side at this time, but I know with the holidays coming up, they're going to entice you, to get all these, to go with the dealership and get lower interest rates and what have you, and maybe enticing to get a brand new vehicle, because it's we all want a new vehicle from time to time, but just remember that even though you may have available funds in your budget to pay off the monthly payment, that doesn't mean it's always going to be a good choice for you in the long run. So for example, if the interest rate is on the higher side, let's say 7% on your car loan at this time, where your credit's sitting at, you got approved for $400 a month, and that's exactly what you tell them that you can afford, but they're making you pay 5-6 years on that vehicle with 7% interest, you're going to end up paying way more than 30,000 or 40,000 that you're, paying on the vehicle at this time. It's always good to take a look at the big picture of the loan versus how much you're able to pay each month. Yes, the vehicle can be $30,000, and yes, it is $400 where you can afford it now, but you have to take a look at, you might end up paying maybe $50,000 at the very end of it. So it's always good to make very thoughtful and deliberate choices. And always monitor your credit report at least once a year. Again, annualcreditreport.com is a great website. They give you free credit reports. You can save, you can print it. And also it's not just to take a look and see how well your credit is doing, but sometimes there's fraudulent activities that you may not be aware of, or if your address is incorrect, your phone number, your name, if you recently change your names, and make sure that everything is correct on there too. And now we're going to talk about payment history. Of course, pay your bills on time is the absolute best way to build your credit and to maintain good credit, of course. But if you've missed a payment, you want to get current and stay current. Get current as quickly as possible and stay current for as long as possible. And if you can't pay your bills on time, please contact your creditors. So there's a lot of times if if you're having a hard time with inflation and stuff right now, and and student loans are starting back up, and you find that your student loans are now, you have to pay $500-$600 extra each month over, you haven't have to pay that in almost 3 years pretty much. Now all of a sudden you have an extra bill of like $500 or $600, and you find that you can't really pay your mortgage this month until you're able to catch up next month. Just contact your mortgage company and ask to see if they're able to defer your payment for this month, or if they have some sort of payment arrangement to get you back on track because of this new bill that's popped up. Credit cards, car loans, all those loans that show up on your credit report, they're more than willing to listen to you, to help you out, because they don't want to default on their record as well. They want to help you out as best as possible, despite what a lot of people think that they want you to default and charge you a late fee and stuff. It's more work for them on the other end versus them wanting to help you out right away. You can always do payment plans to say, if I can't pay the full $1,000 mortgage payment this month, can I pay turn it this month, and then I get paid in 2 weeks and then pay the remaining $800? The point of this is to contact them as soon as you find out, so that way they have enough time to work with you. Because sometimes they have that cutoff date where the cycle is ended, and there's nothing they can do for you for this cycle. You have to pay it, or it's going to be delinquent, and then it's going to show up on your credit report, as delinquency and stuff. But versus if you find out right away and you tell them right away, then it's easier for them to work with you then. And new credits, you want to limit new inquiries, because new inquiries can be if you apply for a loan, a car loan, or if you pull up your credit report, or if an insurance company that you're, shopping around for an insurance company, but you tell 5 or 6 different insurance companies that's okay to pull up your credit score, that's going to be a hard hit on your credit report. So you lose a few points for now, but you'll eventually go back up within a few months. But you want to limit the increase as well. So if you're shopping for a vehicle, let's say just do it within, the weekend or a week, and have different banks pull up your credit report, because it'll show that you're just trying to get this car loan. Versus if you get an inquiry for a credit card this month, and the next month you get an inquiry for a car loan, and then the following month after that you get another inquiry for another car loan. It's just too spread out, and it'll just keep hitting your credit score and just keep bringing it down a little bit more as well. Have credit cards or manage them responsibly when you have your credit cards, of course, which can get out of hand pretty quickly for a lot of people. So if you are having a hard time paying your expenses now when you don't have a credit card, some people think, if I just get a credit card, it'll take me from, cover my expenses for food and gas for the next few days until my next payday. And then that might not be a good idea, because if you're already struggling that much already, just to use a credit card to hold you over, I think it'll be a good time for you to come see me or come see someone else to talk about about your budget and about your finances. So that way they can help you figure out ways to try to where you can cut money from, or where you can save money. Other creative ways that you might not think of to have that extra money, because if you're already struggling that much, chances are that credit card balance is going to build up pretty quickly, and that's the last thing we want, especially if you know that you're not going to be able to pay it back, in full. And always, you might want to close old accounts. Closing old account doesn't make it go away. So if you have, like, let's say an old Capital One credit card that you got from college, it's not doing you any good. It's not giving you points back. It's just, it's charging you annual percentage or annual fees each month, each year. And then so it's just wasting more money even though you're not using it. That might be a good idea to close that card, but remember it's an older card and it has your length of history on it. So you might want to, it's just reconsidered as well. But just because you decide to close that card, that doesn't mean that the account will go away altogether. So closing an old account doesn't make it go away. It just stays on your credit report for a few years. Capacity, so credit utilization, you want to pay down high balance credit cards and revolving debt as much as possible. We want to get you under that 30% utilization, which is optimal, what the banks and stuff want you to see. You want to pay off debt rather than move it around. So again, around the holidays or other holidays, around the summertime, around Memorial Day, Labor Day and stuff, credit cards are always running specials. We're offering 0% APR for the next 12 months or 15 months. And that sounds very enticing. This actually sounds really good if you have, let's say, a Capital One with 28% interest rate, or a Kohl's credit card or a Macy's credit card that has a higher interest rate, and you think, wow, I'm going to open that credit card, the new credit card with the 0% APR, and I'm going to do a balance transfer from that one credit card to the new one, which sounds ideal if you're able to pay it off within that 12-month introductory rate. Because otherwise, then after that 12 months, it goes up to like 17 or 27%, whatever your credit score is set at. But also, you have to look at the fine lines. If you decide to do, use that credit card with a 0% APR introductory rate, if you miss a payment or is late on one payment, then the interest rate goes up right away too before the end of that 15 months or whatever, 12 months. So it's really important that you just go ahead and pay it off where it's at now, and not just move it around, shuffle around too much. So go ahead.
If someone wanted to come into the credit union and meet with you,
Uh-huh.
what do we tell the receptionist?
Oh, yeah. So you would usually just reach out to me and schedule an appointment first. And then when you come in for your appointment, then you just tell the receptionist that you're here to see me. Okay. Yeah, and they'll send you over. So it's really important that we schedule an appointment first before you actually come out here. And I meet face-to-face, of course, over the phone, Zoom, or Teams as well. With a lot of times, people are just busy, and I'm here from 8 to 5, which is pretty much everyone's work hours as well. So it's if it's easier for people to do Zoom or Teams, I'm more than happy to do that as well. Yeah, yeah. And then always use caution when closing older credit cards. Again, that goes to the length of history as well. You want to keep that length of history as long as possible. But if you decide to close it out and it's an old account, it's costing you too much money, it's not going to affect you that much on your when it comes to your credit score, then that's your choice to close it too. So the length of credit history, so the age of your oldest account and average age of your accounts. Do not apply for unnecessary credit accounts, of course. If you don't need that extra, Home Depot credit card, let's not apply for it because the interest rate is going to be higher. I know they have great offers from time to time, but let's not be too enticed, or let's not fall for marketing that much. Sorry, Christian. Use caution when opening new credit cards to transfer balances. Again, he's had a director of marketing there, so that's. When I'm talking about Home Depot, not us here. So we always have great rates. We always take care of our members. So, and always use caution when opening new cards and transfer balances. To transfer balance, that's exactly what I was talking about before. You have to make sure that you read the fine prints. I know it's annoying, it really is, and. You think, in a perfect world, you're like, I'm always going to make my payment on time. I'm going to transfer this high credit card balance, this high interest credit card to a 0% interest credit card, and I'm going to do everything I can to make sure I pay it off within 12 months. But what if something happens where you need new tires for the winter coming up, you're in a car accident, you need to come up with an extra $500 or $1,000 as, car insurance deductible, and that money that was supposed to go to that credit card is now no longer available. So now your interest rate is up to where, a normal interest rate would be and no longer at 0. So it's really, really important that we plan out way ahead of time. It sounds really enticing, but it's something to really reconsider as well. Fundamentals of borrowing. So what impacts your credit score the most? So your credit scores, your credit cards. So when you when you borrow from us or any other financial institution, of course, they're going to look at your credit score. That's going to be the top thing they look at. And also your credit cards, how the balance utilization and stuff, how well are you utilizing that credit card? How often are you paying it back, of course. And also other loans that you may have, auto, home, and personal, and your debt management. So how are you, how's your past debt management? What is your current debt management? Are you able to pay it back? Once you get yourself into debt, are you able to get yourself out of it, or is it delinquent? Or just look at your overall debt management as well. And that goes into your debt to income ratio, which is at the bottom there. And they look at, of course, your credit inquiries. If you're applying for, a personal loan with us, and we see that you're other inquiries on your credit report from other institutions, then we know that you're shopping around for rates and stuff. And also your payment history. So if you're applying for a car loan and your credit history from the last car loan that you received was not, very good credit history, they might take that into accountability as well when applying for loans. So we're going to talk about good debt versus bad debt. But before we move on, do you guys have any questions here or online, Christian? No? Okay, perfect. So we have mortgage, education, business, investments, vehicle loan, credit cards, store credit, and cash advance. So good debt will be considered, typically a mortgage will be considered a good debt because you're building your equity. And you could always use that equity as, take equity out on it to pay off loans later on too, or, to buy a second property or whatever else you need from it. So it's giving you equity for, generally, when the market's good, it's giving you equity. Education, consider good debt, right? Because you want to invest in yourself, in order for you to finish nursing school or medical school, you're going to have to get some student loans. I don't know too many people that don't have student loans, but we consider education as good debt. Business, well, yeah. If the business, it's always good to evaluate your pros and cons before getting a business loan as well, and about your business. So, and then also investments. So you don't want to take a loan out to invest into like the market or something like that. What you want to do is just pretty much use your own money if you're able to invest in things. Vehicle loan, it's necessary, but it's not necessarily good debt. But we all, us from time to time, need a vehicle loan. So credit cards is not always good debt because if you're not able to pay it back and stuff, then it becomes, a negative on your credit report. Store credit is not always. It depends if you're able to pay it off all at once, once you get your merchandise and pay it off all at once, or if you're able to pay it off within 5 or 6 months instead of let it linger for a long time, because that typically store credit cards have very high interest rates, so it's always not very good to get a store credit. Cash advance is always bad. So cash advance interest rate is really, really high. It's even illegal in about, I think, 14 states in the US right now is illegal because their interest rate is really, really high right now. Yeah, so a lot of people get into the cycle of cash advance or payday loans and stuff. So that's always bad debt. So when it comes to debt management, you want to organize your debt. You can do it a few different ways. If you go online and how to pay off your debt, there's so many different suggestions. You can organize it as the largest balance first to try to pay that off first, or pay off the smallest balance first and work your way up, or pay a balance with a higher interest rate first, so that way you get rid of that debt a lot sooner. So many different ways, but it's always important to organize it. Know exactly how much you owe, where you owe it, when it's due, and the interest rate is very important. So for example, when you meet with me and we start to organize your debt, I always want to find out the interest rate on that card or that debt that we're working with. What is the credit limit if it is a credit card, and when is the payoff date, and what our goal should be to pay that off. So it's always good to organize all those things and know exactly how much you owe, and also very good to know exactly how much you're bringing in with your income as well, all of your income. So if you're working a main job and you have a second job, or if you're working a job and your significant other has another job as well, and if you want their income to include into paying your debt, or is it your guys' debt altogether? So it's really important to organize that as well. Plan which one to pay first. So whichever one works out, and I always recommend paying the high interest rate one first because you're going to save yourself a lot more money. Do not accrue new debt while you're trying to pay off your debt. So This would be if you are not disciplined enough to use a credit card, if you know that you have some sort of shopping addiction, or you know that your management with credit card is not too well. Let's not get a new credit card to pay off the rest of the credit card, because some people are able to, are disciplined enough to get a new credit card with a very, very low interest rate or 0% interest rate. They can do that balance transfer knowing that they're not going to go crazy on that credit card that they just paid off. If you know that you're not going to have that kind of discipline, let's not get new debt. Let's just work on taking care of the one that we currently have. Things to consider when getting a loan to pay off debt. So we do offer loans here as well. Our rates are pretty competitive. So you want to consider the interest rate. So you always want to get a loan with the lowest interest rate. So and again, it's going to be pretty much close to the same interest rate no matter where you go, because it's based off your credit score as well. So whatever's on your credit report, okay? The length of time you'll save. So for example, if it's going to take you 5 years to pay off your credit card versus 2 years to pay off this loan. So if it's going to save you that much time to get this loan to pay off that high interest credit card, then it might be worth it, because you're saving yourself a lot of time and a lot of money with that interest as well. Refinance your home or vehicle. So this goes into, like, if you have equity in your home, you can get home equity line of credit, or you can, just get refinance your home to take out the entire amount that you have equity in to pay off your credit card. But again, you're dealing with a new interest rate as well, and you have to take that into consideration, whether it's good to pay off all those loans and then have this one big loan that you have to pay back. And also you can use your vehicle as collateral as well when you get a personal loan. And credit card balance transfer, we just talked about. So now we're going to go into myth or fact. Before we do that, is there any questions at this time, Christian? No? Okay.
I'm just shocked
Yeah.
that you're here to help us for free.
Oh, yeah, it's,
I didn't
yeah.
know that.
Oh my gosh, yeah. So we've been, I've been in this position for 2 years, but we've had, credit counselors prior to me as well for several years. And so with this, so last month I was getting my certification for the credit counseling, but I was up in the cities, and there was, I think there was like 28 or 30 people that was there for testing, and I was the only one that's a full-time financial credit counselor. Yeah, that was getting that certification. So other credit unions does not have this full-time position. Yeah, and I'm here, just like I said, I'm able to help people face to face and do all, or Zoom, whatever is necessary. But also the information that we give on Financial Wellness Wednesday. I know investment people, like Don, he's going to be here after me here. I highly recommend you staying. He's so wonderful, such a great speaker, and he gives such good information. He talks about investments. That's just something that I think a lot of people are a little gun shy about, at times too, especially asking, not knowing what to ask. And he's able to help you with that. And they meet with people all the time. And so it's part of the perks of being our member as well is that you get my service for free. You get information from the investment team, but we also have speakers that talk about how to buy vehicles and mortgages and stuff too. So that's all free to our members. So I'm glad that you like the service. Yeah. So myth or fact: if you can't afford your payment, call your lender, creditor, and doing so will protect your credit. Well, it's the myth, because even though you're calling ahead, it's not always going to protect your credit. How you can protect your credit by calling them in advance is that, letting them know, listen, I'm not able to make this month's payment, but is there any way that I can at least pay a portion of it to stop you from reporting this as delinquent on my credit report, that I can pay the rest in this day? So if you have a payment plan, then a lot of times they work with you and not report it as negative. But versus if you just kind of forget it altogether, and then that company has to report to the credit bureaus on day 31 or day 35, whatever the situation. So it's always good to let them know in advance as well. So myth or fact: opening up a store credit card will save you money on what you buy and build your credit. Yeah, it's both, because they're always, like I said, if you're trying to save 30% with Kohl's and with your purchases with Kohl's, and all you have to do is open a credit card, then yeah, you're going to save yourself money at the time. But also you're going to build up your credit score if you're able, credit score on your credit report, if you're able to maintain those payments, if you're able to not overspend. So you got to, stay under the 30% utilization, and also make your payments on time as well. So, but again, the interest rate's always a little bit higher too. And if I close my credit card, even if it's a card I don't use, my credit score will drop. Partially fact. So if that credit card that you're closing, it's one of your older credit cards, and that's one of your, it's part of the length of your credit history. And if you close it, then it's not really, kind of decreases your credit score by a little bit. But also, if it has a large available credit, you're actually, when you close it, now you're taking away from all the available credits that you had initially access to. So your credit utilization might go up as well. So that's partially fact. Requesting my own credit report hurts my score. If you go to my credit report, annualcreditreport.com, it's not going to hurt it at all. But if you go to Capital One or, if you go with a company that requests your credit score and they have to pull your actual credit report and your credit score, if you go to a bank to apply for a loan just to get your credit score and stuff, and just to get your credit report, then it's going to go ahead and decrease your credit score as well. So just be mindful when you do that. And a good way to find if my credit score is improving is to test it by applying for a credit card. Yeah, because if you don't know how accurate Credit Karma or your credit card scores or how accurate they are. So if you're ready to get a new credit card but you're not sure how much your credit has improved, it's worth applying for a credit card. But just be mindful knowing that once you do get that credit card, you have to be very disciplined in spending and paying and saving for it to pay off that credit card. So not having any credit history is really bad. It's not terrible. It's a myth. So it's better than having bad credit in some cases. That way you can always start fresh. You can always try to get a loan and pay those on time and get a credit card and pay it on time. So it's not bad not having a credit history at all because you have an opportunity to start fresh. So it hurts your credit score if one credit card is maxed out, but all the other credit cards are not. Because it brings up your credit utilization. So as we know, credit utilization is really, really important. That's how much you spend on your credit cards. If I pay off credit card every month, I'll have good credits. Yes, but it's a fact, yes. But if you don't have money for any of your other pay your car loan or what have you, then if you're delinquent on that, then it might not be good as well. But also, it's preferred that you show some sort of debt on your credit card because it shows that you have control, that you're able to go up to 20% or 30% utilization. So it kind of registers that you're able to pay it back. You just want to keep it on there just long enough where at the end of the billing cycle, it shows some sort of balance on there, and then you can pay it off right afterwards as well. It's better to settle an old debt for less than the full balance than pay the full amount. Both. So this is talking about like settle in full. So if you have an old credit card that's gone to collections and it's $1,000. So it's with a third-party collection, but let's say Capital One still owns it. And you want to settle it for, let's say if the balance is $10,000 and you want to settle it for $5,000 or $4,000 or something, and they accept that, then it's good that you only have to pay that $4,000 to close it out, but it shows up as settled in full on your credit report. But remember, in most states, you're going to get a 1099 saying that you saved anything that you settle over $5,000 on debt. That company will send you a 1099 showing that you actually made that $6,000 in this situation or $5,000. So just be mindful of that. It's always best to pay it in full, even if it's in collections, simply because it shows future lenders that yes, you did, it had a hiccup, it went to collections, and you still want to pay it back in full. You still want to honor your contract and still pay it in full. So it's always best to pay it in full. I've bruised my credit in the past. Filing a dispute will remove that bruise and improve my credit. No, just because you file a dispute on it, that doesn't mean it's going to be removed. Because if it's a bruise, meaning that you just, you had a hiccup, you weren't able to pay on time that month, and companies are mandated to report it to the credit bureaus accurately. So if it's a true report, then they're not going to be able to remove that for you, even if you dispute it. It just says dispute on there, but it doesn't take it off. And credit repair company can remove collections and late payments from my credit report. No, because if it's a true report from that company, they're not going to remove it. But if it's a mistake on their end, of course they're going to remove it. But it's something that you can do yourself too. If you pull up your credit report on my annualcreditreport.com, you notice that, hey, 2 months ago, I did make my car payment on time. I don't know why it's reporting as delinquent. Then you call up your car company and, the lender, and you ask them, why was this reported as 30-day delinquent when I was, when I paid it on time? And they might say, oh, you know what, we received that payment, a check that you sent out the day after that, the cutoff mark where it's 31 or 35 days delinquent. He said, you know what, that was, my bank that I sent out a bill pay, I actually sent it out late when I actually made the payment on time. So once you prove that that you paid on time, they can just fix that. They can reverse it and say that you made it on time. So that would be the situation when they can fix that on the credit report, because it was an actual legitimate mistake. But you don't have to get with a credit repair company to do that. You can do that on your own as well. They're doing the exact same thing that you're going to be doing, except you're going to pay them. And a lot of times, a lot of them are fraudulent companies too, so just be mindful of that. Once you have bad credit, you'll always have bad credit. No, not true at all. You can always get new, start making your payments on time, rebuild that good payment history again, and then you can get your credit score back up as well. And I've had a major disruption in my credit history, such as bankruptcy, foreclosure, or repossession. I should open a credit card to rebuild my credit score. Yes, so it's a fact unless, let's say, for example, you filed bankruptcy and a lot of it was credit card. And you said that, when I was younger, I didn't have the discipline to pay on my credit card in time. I didn't have the funds. I was just, spending. It was a pandemic. I thought we were all going to die, so I spent it and bought a whole boat or whatever it is you decide to do with it. So now you don't have the money paid back. You filed bankruptcy, and that now you're considering, should I get a credit card to rebuild my credit score? If you aren't disciplined now, if you know that you have to make your payments on time, if you have the financial ability to pay it on time, then it's a good idea to get a credit card to rebuild your credit history. Credit cards, loans, whatever other loans that's going to show up on your credit report. It's always good to get those to rebuild your credit history and also to build your credit history as well. But again, if you never learned from why you spent so much on your credit card before and you put you into bankruptcy before, then it's not a good idea to get a new credit card, because you're going to be in the same situation over and over again. So, and that comes with, building habits, breaking habits, changing habits and stuff. So when I work with members that are on that journey to rebuild, a habit or change habits and stuff with their spending, it's really important that, I usually meet with them more often, because when it comes to changing habits, as we know, it's so hard. And you kind of need someone to kind of just check in with you every week, a quick phone call here and there, just to remind you, hey, we're still in it together. We're still working towards this journey together towards this goal. So it's really important that if you are trying to rebuild your credit and stuff, that you have to recognize why you're in that situation in the first place in order for you to change and, get better with the second time around. So my credit score can change daily. It's true, because there are some companies that report every 35 days, 45 or 90 days, or 160 days. So it depends on the company that reports, and it's going to show up on the credit report, with the updated information. So your credit score might change daily. So. And again, this is my name, my phone number, and my email address. So if you are interested in meeting with me personally, whether it's to go over your credit report, credit score, if you need help, setting up budgets and stuff to pay off your debt management, I'll be more than happy to work with you on that. Do you have any questions online, Christian? No?
Not yet, but it might take a couple minutes.
Okay, yeah, sure. Any questions in here at this time? No pressure. So, but also a lot of people, when they meet with me as well, what I find that they actually don't really know how much you're spending in certain categories. So for example, they think that, they know they're bringing in, let's say $5,000 a month, okay? But they don't know where the money is going to. They don't have that much in savings. They don't have an emergency savings set up. They just know they need to pay their credit card on time each month. So a lot of times I work with people on how to, save money and figure out where your money is going to as well. And then how to pay off your stage you are in your financial journey. You should always have a budget. It's really important, so, okay. Yeah, absolutely. So if you guys have any other questions, just let me know. And online as well, if you guys have questions, you can reach out to us. My information should be on our website as well. So thank you everyone for attending today. Have a great day.